Alright traders, we're going to talk about price action trading, how to navigate the price charts, and how to understand price action rules. There are rules in price action that the candlesticks are following. There's a reason to price movement, and it takes time to learn to read the chart, but there are price action rules that can help us to identify the direction of the market and what is the high probability setup. Now we're looking at two examples of high probability setups in front of us. And this is a variation of a two-legged pullback because market doesn't move in these straight V-shaped formations. There are corrections within the moves. And this sounds simple, but if you train your eyes to see it, this is exactly the way how market likes to move. And there are two-legged pullbacks within the price movement. And if you combine the two-legged pullback with the proper market context and a key entry point, a high probability setup may appear. So you have two high probability setups on the left. We have a two-legged pullback second entry long off the trend line and the support, which is a key entry point. And we have second entry short off the trend line and off the resistance. Now on the right, we have a failed two-legged pullback. That means that this is a two-legged pullback that is forming under the wrong context. And we are interested in this setup as well, because if you're reading the context correctly and you can see two-legged pullback on the wrong side of the market, you can take advantage of the trap traders who are on the wrong side of the context. In this video, we're going to go through how to identify these high probability setups using price action rules, and we're going to go through basics of the price action, so it is going to be a little bit more beginner friendly. Now when I'm first watching the chart, I need to identify what exactly is the pattern, and this would be the structure that I would be looking at. And we can see that the structure, if I'm just relying on the naked candlesticks without any indicator, although I'm using one indicator, this 21 bar exponential moving average, this blue line, this is just a supportive indicator helping me to identify the bias a bit better and helping me to identify how far prices are away from EMA, because prices tend to pull back to EMA regularly. So what I can see, I have spike up, I have bearish trend down, and I have bullish trend up. So this is not a healthy trend in either direction. This is a trend range structure, up and down, up and down. So what I have to do, I need to identify key levels for the trend range. I have the support here, which I always want to identify the low of the day during the pre-market support and the high of the day resistance at the top. So I have extremes for this trend range. And now that I'm looking at the structure, which market is opening somewhere around this area, I'm going to zoom in a little bit more. I can see that the structure is no longer pointing to the bullish direction, but instead it's flattening. Notice EMA is getting flatter, it's no longer pointing up, and I can see move up, move down, move up, and the move down is starting to happen. So now I'm getting signs that inside of this bigger trend range, there may be a smaller trend range as well. And for that reason, I need to identify the smaller trend range. So what I'm going to do, I'm going to look for confirmations of these lows. And you can see I have some bounce here, and bounce here, which looks pretty legit. You don't have to be perfect, you just have to be close. And with time, you will get the sense where the lines may be appropriately. The important thing is to realize that you are in a trend range, so you don't get caught selling too low or buying too high. And notice, on the chart, you can see a lot of lines I have drawn, and this is because I want to follow the trend line rule. I want to stay on the right side of the market, because if I don't follow the trend line rule correctly, if I don't draw these trend lines, I can get trapped on a wrong two-legged pullback, and traders can take advantage of me being on the wrong side of the market. And this is what I don't want to do. I want to stay on the right side of the market and take advantage of the other traders. So we started with the bearish spike down. We have a channel working lower. Notice we have a break of this channel right here, and market created new extreme, indicating depletion of the bearish downtrend, and bearish momentum is over. And if you push above the support and above EMA, this is indication that the support, this potential trend range, is coming into play and the buyers are starting to buy. So you're combining two price action rules here, the trend line rule and the trend range rule. Now, however, from the very top all the way down, we can see prices keeps rejecting quite consistently. And for that reason, even though I have a break new low, I'm not interested in buying, because you never know how many pushes lower you're going to make. If you see so many rejections of the EMA, it is a small move, yes, but it is still showing signs of rejection. I don't really want to pick bottom, even though according to trend range rules, most breakouts will fail. The safest way to play this is to wait for push above EMA and to get a failed second entry short, high probability setup. We have a new low failed second entry short right here, but the signal bar is not great. It is a bearish bar. I want to buy above bullish bar. So this is more advanced entry, more aggressive. I wouldn't like taking this because of the signal bar, but had the signal bar been much bullish, this would have been great entry. And let's talk about why this is a failed second entry short, because this is the lowest point in this move down. So this is where I start counting. And the first entry short will trigger after break below the low of either one of these bars, because we have series of 3 bars working higher. And we finally broke below this bar low, triggering the first entry short. So we have first entry short here, which failed, correction working higher, and I'm looking for the same thing. I'm looking for break below these bars lows, and the first bar we broke below in the second leg is right here. So we have first leg, first entry short, second leg, second entry short, triggering below this bar right here. Notice the low of this bullish bar, we ticked one tick lower, triggering second entry short and a failed second entry short. So everybody's going short on the 2-legged pullback, but the context is wrong. That's what this makes a good failed second entry, because context is not good. Downtrend played out with the break new low, indicating sellers are over, and the support of the trend range is holding, so expect buyers to come into the market. So in fact, you're taking advantage of the trap sellers. It's close to EMA. It's a great reversal pattern, but the signal bar from really bad. And notice, prices are doing the same thing, just to the opposite side. Because we have short and uptrend with the break new extreme. You have push below EMA, but notice this failed second entry long. I cannot take this failed second entry long. New high, first entry long, pullback, second entry long, failure. Because it is too far away from EMA and the signal bar is doji. Even though it worked here, next time you take it so far away from EMA, you will get burned. You'll be wondering why this quote-unquote high probability setup failed, but this is not high probability setup because it is really far away from EMA. You cannot gamble like this. You really want to see it close to EMA like this. But you can see how EMA is flat, a lot of price swings up and down, and you are in a trend range. So this is the structure you're focusing on. You're expecting for most breakouts to fail, because that's according to price action trend range rules. Prices will pull back into trend range 90% of the time. You can see downtrend working lower, followed by a break, new extreme again, indicating downtrend played out. Support is holding, and this blue rectangle is indicating a news event, which you can see spike in volatility. You don't be trading during this volatility spike. Now, when I was watching this, at this point, I was a little bit more bullish. I was expecting high low after 2-legged pullback, because I hit my resistance a little bit higher like this. And generally, when you see smaller trend range, smaller resistance so close to the main one, prices will come all the way up and they will test the main resistance. Now, it was a little bit tad lower, so prices did test it, but you really want to see more significant push. However, prices are pushing lower. You get a failed second entry long, but it is above EMA. And at this point on, you can see area on the chart without any decent high probability setup. I cannot really sell any setup here. I cannot buy any setup here. So this is just quite confusing. It's getting a little bit stacked. No clear buys. It's looking too bullish, but at the same time, prices are struggling to stay above EMA. So this is just the area where you sit on the chart, because no price action rules are allowing me to take entry in either direction. So I'm just sitting patiently. Notice prices are pulling back into this trend range. We have a strong downtrend working lower. We have a break, 2 legs to a new extreme. And notice, are we expecting here for prices to push back into this trend range? We are not. And why not? Well, here's a little bit of a nuance. Because when I was watching this and I saw prices forming this first entry short, I was preparing to draw my trend line a little bit wider like this. Now, why am I doing this? If I'm saying that most breakout trend ranges will fail and you're expecting for prices to push back into trend range, well, first of all, some breakout will eventually work. The way how can I identify that I expect for bearish bias to continue is, notice from the very failed breakout at the top, from the very resistance, all the way down to the support and even push below support, prices haven't touched EMA once. They never closed above EMA, they never confirmed it, we never got bounced off the EMA. So there is like a hockey stick swoosh lower from the very failed breakout all the way down here, which is indicating to me that we may have a follow through of the bearish momentum. Okay, because if you take a look at structure inside of the string range, you can see EMA still being touched multiple times and the moves are quite weak. This was quite a significant move from the failed breakout all the way down here. So this is how you're using a little bit more of a advanced chart reading skill to help you identify what's going on. You can really see how prices are not touching the EMA for a long time. First two swings will help you identify the channel, the trend line, and now you get a confirmation. And notice, here we have a high probability setup. We have a new low, first attempt to sell because prices broke below this bar right here. You can see we have 1, 2, 3, 4 bullish bars, 1 bearish bar triggering first entry short. it failed instantly because that is not a high probability setup. The high probability setup is a two-legged pullback that will indicate the end of the correction, and we have second entry short triggering here, decent bearish bar. Fortunately, I didn't have doji. I had one tick bearish body, which is a good indication that I can at least try to take it. Uptrend played out with the breaking new extreme. The shortened correction has a break new high, which is indicating the bullish momentum played out. I need to draw the shortened channels even for the corrections, not only for the main channels, because those corrections need to get new extreme as well. Okay, so break new high indicating this uptrend played out, and I have multiple key entry points. This channel, the EMA is a key entry point as well, and notice the support I identified earlier is now acting as a resistance. Prices broke, came back, tested the breakout area, and I have 3 key entry points, second entry short high probability setup, and this is the two-legged pullback like this, but on the right context. Okay, it's all about identifying the context properly. So this is my first trade for the day. Market continue pushing lower, and there is a long time without a good setup. Why? Well, because notice all of these channels are in play and they don't have new extremes. Plus, you know, there's really no great entry. You have a second entry short here, actually new low, first entry short here, pullback, second entry short, but you know, short and uptrend is in play. It's above EMA. I need to wait for prices to push below EMA. Then I have new low. I have first entry short here only. I don't have two-legged pullback, nothing. Just no good high probability above EMA. You know, no good setup. I can see that prices created move to new extreme, pullback, second move to new extreme, and there was a tiny little lag to new extreme. Now, when I was watching this, and this looked quite bearish, I was leaning more towards prices reaching the new low. So I was looking for potential via the channel like this. But notice what we have here. We have new low, first entry short, second entry short, failure. And we almost had double trap, but it formed above EMA. And it was doji bar, but I would not take this anyway, because if I'm going to draw this, we're failing to reach the bottom of the trend channel line. The trend is losing steam, and it just feels like the correction needs to be a little bit stronger. Okay, so you need to have more confirmation. You can see eventually once prices are pushing higher, you're going to adapt, and I'm just going to delete the wider channel and stick to this shortened channel working to the upside. So as the prices are working higher, I need to respect the shortened uptrend. The downtrend played out, so I'm forgetting about the bearish downtrend. I'm just looking for high probability setups to go long. So once I have a break here of this uptrend, I expect new high to be formed. So what am I looking for? A second entry long, two-legged pullback, preferably closing near the EMA. I would want to see first leg down, pullback, second leg down here, but that never formed. Market just created move up, and we had a new high form, which indicated the bullish uptrend played out. Okay, this is the highest high, which I can reset the count, and we have a first entry long because we broke above this bullish bar, indicating first entry long, pullback, second entry long. Now, why am I counting for second entry long if the uptrend played out? Well, because if the uptrend played out, I expect reversal now. I no longer can look for longs because this uptrend played out, and you can identify this channel easily. There's no denying how nicely prices are fitting neatly inside this channel. So we have a break new high indicating trend line will play out. I'm in the overall trend range, so I don't have to be worried about any other pattern pretty much. I only have to follow the short-term price action. You can see the reason to how prices move. It is very reliable to how prices move. It's, of course, it's much harder to do it real time, and you have a little bit more conflicting patterns, and setups may go fast, so you may not catch the setup. But these are the price action rules that with experience and with time, you're able to see it more and more with better reliability, and you're able to build the confidence in the chart reading skill. Because we have a new high, first entry long, second entry long, failure. And this was my second trade for the day that I took. The setup worked for more than 8 ticks. I actually used a limit order 2 ticks back, so I was out really quickly because this was extremely fast trade. But you can see that you can actually approach it even a little bit differently, because I marked this setup right here, which if you're an advanced trader and you understand the price action, you can kind of look at these highs and see that this is one area of matching highs, and you can reset the count here. So you have new high, first entry long here, pullback, second entry long, failure. So a couple traders looked at it that way. It's closer to EMA. This downtrend still needs to get new extreme. So nothing wrong with treating this like this. I counted from this very high as a first entry long, second entry long, failure. But there is no problem if you're more advanced and confident in the price action that you can actually reset the count and take even this setup right here. And notice prices created 2 legs down, one more push down, and market reversed strongly 5 consecutive bullish bars above EMA. This is why using the EMA as well to show you how there is no rejection, strong momentum. And by the way, just like I did here, I see EMA putting up, flattening, and I can see up, down, up, down. I see triangle structure. I'm starting to see the same thing right here. I have EMA putting up, flattening, and I have up and down triangle structure. So I need to identify the key levels. So when I was watching this is what I was looking for, something like this. And notice this bullish uptrend has a break new high. So both bullish trends have new extreme. For the reason, even though I have a new high here and I have a first entry long pullback, second entry long, I have two-legged pullback, I cannot take this long because both uptrends played out. Now when I'm going to look at the structure, I can see that prices failed to reach the support. So there is a little bit of a bullish imbalance and a little bit of a bullish momentum. However, I cannot still go long. But notice, if you're a seller and you're playing this trend range and you're looking for failed second entry long, which is not a bad idea to be looking for, you have new high, first entry long here, pullback, second entry long here, failure. But the failed second entry long formed on the wrong side of the EMA. If you're a seller, you want to sell failed second entry long below EMA because you want to see confirmation of the bearish momentum, prices pushing below the EMA. This is how useful the exponential moving average is. The fact that it didn't happen and a failed second entry long formed above exponential moving average is now indicating to you that this high low trapped all the early sellers. And if you combine it with the fact that you have two legs down, downtrend has a break new low, this high low is a confirmation of this second entry long, great high probability setup. You trapped all the early sellers selling failed second entry long. This setup was, however, very fast because you're not quite predicting a high low because you can get failed second entry long, but once it formed above EMA at the last second, a nice high low form, indicating all the early sellers got trapped, nice high low, confirmation of the second entry long, and market continue working higher. Okay, so you can see the trend range structure keeps developing with a bullish bias. So this is pretty much area where there is no high probability setup. There is not a single second entry long or second entry short. Notice flat EMA, a lot of indecision. You are at the top of the trend range, but you have no good setup to sell. You have no good setup to buy. There's a possible channel like this, which I'm looking for, because after you push above EMA, you have to gauge the structure. If this is a trend range, notice how much empty room there's at the bottom and you have another strong push above EMA. So this is concerning. This is basically negating the trend range. However, I can still see some resistance. I'm just going to move it higher because I don't want to go long directly into these highs. We can get burned fairly easily, even though this uptrend is in play. Now you can see still there is no setup. Notice how many bars are overlapping. This is a congestion. You want to see clean structure here, here. You want to see clean pattern, clean high probability setup. This is area of indecision. You're too close to the resistance, but you're too far up in the bullish momentum to sell. So there's pretty much no setup here at all. You get a high low here, but it's way too big, too far up. And notice market is pushing higher. Okay, so this channel has multiple new extremes. So I definitely cannot sell. If I'm going to zoom back, really zoom back, and take a look at the entire structure, notice the clear bullish bias that is present in this market. And in fact, there is even a wider spike in the channel, which I'm not going to draw just yet. But this is a possibility at this time, but you can definitely identify later on. But notice so many high highs, so many high lows, and the trend range is very large on its own. Okay, there are big trends, strong trends inside this trend range. The reason why I'm talking about this, because trader took this failed second entry long, and he was wondering why it failed, but this is too early. When the trend range is big and there are trends strong on their own, you want to see proven trend in the opposite direction. You cannot take this failed second entry long reversal pattern because it is just too early to pick a top. There's so much of bullish momentum. There's bullish bias, so this is early short, so you don't want to sell. You're thinking bullish, but you really need to be selective. You have a new high, first entry long, second entry long below EMA. Micro double bottom resets the count. If I see micro double bottom, and if you push above EMA and I get high low, there is going to be a confirmation setup. And indeed, that's what happened. Downtrend has a break, attempt to create new low, strong push above EMA, and you have high low. But notice by the time it formed, it got quite congested. You know, this is not a horrible setup. If it wasn't so congestive, would have been a great setup. But EMA is flat, it's a little bit stacked. But you can see EMA keeps holding prices. And from this very low, now you have first attempt to sell, pull back, second attempt to sell. and another sellers selling second entry short under the wrong context, because we have series of high highs and high lows. So the structure is way too bullish to sell directly into EMA while EMA is holding. And after this big bullish bar formed, this basically changed the bias quickly. It wasn't looking like that. It looked like prices may create second leg down for this first leg. But at the last second, this big bullish bar formed, which is indicating to you that they all got trapped and you want to take advantage of these traders. So this is a failed second entry short off to EMA, a nice big bullish bar. And this was a quick, easy, high probability setup. Now you can see you're bouncing off the main key level of the day. Market is correcting, break, new low. Kind of like a first leg down, second leg down. I mark this high low as an aggressive setup because you have break new low here, you have definitely break here, you have two visual legs, you have strong push above EMA. So aggressive trader can't take a chance here on a high low because trading is about taking a chance, it's about probabilities. So this is not a horrible setup, but you want to see a failed second entry short to get a trap just like here to be sure. But if you took it, there's a case for this to be made. However, I would really prefer to see a failed second entry short to be more sure, because at this point on, you're bouncing off the resistance, you may have correction. Market is correcting lower. You have second entry short, but there were so many higher highs. This main channel that we're going to talk about soon is in play. Even if you don't have it in play, you just don't want to reverse the market too quickly. You want to see a proven momentum. There is a break, new low for this by the downtrend. And notice, price is strongly pushed above EMA. Okay, so once you now strongly push above EMA, and there is no longer bearish follow through, this downtrend has a break new extreme, and this is all the momentum sellers have generated, and follow with such a big push above EMA. This is confirming the bullish bias again. So this is definitely a confirmation, and I know a lot of traders play this nice spike in the channel very early, but I'm hesitant to draw really wide patterns too quickly because they really don't come into play too often. And this is one of the few wide patterns that were actually valid. Notice this is a very wide channel in trading range. So you can see even in trading ranges, occasionally you will have a wide pattern. So this wide pattern was confirmed definitely after you have strong push above EMA. And now you can see break new low. So the downtrend played out. Strong push above EMA. And you have new high. First entry long, pull back, second entry long. First leg down, pull back, second leg down, and downtrend played out with the break new low. So this right here is the high probability setup, just like here, the two-legged pullback setup. Okay, the context is bullish. You can see you're on the right side of the EMA, the two-legged pullback, and you can see this is how market likes to move. And it's just about training your eyes to see it. You can see another first leg, second leg. So there are these two-legged pullbacks, which if you don't know what to look for, can be quite hard to make sense of this, because if you're going to zoom back, you see a lot of price movements, especially if you don't know where are the key levels, where are the key entry points. It can be a little bit hard to make sense of this, but this is why there are these price action rules. This is why we study the chart every day, and you need to study your chart every day after your trading session. That's the only way you're going to learn it. If you don't study your chart and you don't work on this skill, it will be pretty hard for you to make a significant progress. You need to be in the game, immersed in trading every single day. In that way, you keep practicing, you keep progressing. So it's really important to go back and study your trades after the fact and learn from your mistakes and even learn from the winners, because sometimes you can take a winning trade and you can just get lucky. That can happen, you know, on every single candle, there's a 50% chance that it's gonna go in your direction, even if you're reading the context wrong. So even you have to study your winners, so you make sure you're not just getting lucky and you're just not gambling. You really want to make sure you're building a foundation of following the rules properly and not just gambling. So you have two-legged pullback here. When I was watching this, I would not probably take this doji-ish bar. I knew a lot of traders had nice bullish bar here with a little bit of a bullish body, which is a great setup. There's nothing wrong with waiting for this bullish bar to finish and drop your limit order, because this right here now confirmed this bar. This is kind of like two reversal bar entry. So you can definitely wait for this bar to finish, because EMA is now holding, and even the support here is a little bit showing. You can see small little support previously act as a resistance, and this main channel needs to get new extreme, which now new extreme was formed, and you can see market is pulling back because most breakers of trailing just will fail, and this main uptrend has new extreme. So you definitely want to be careful. So I hope the video was helpful, educational, and I'm gonna see you guys in the next one. Take care, everybody.